Have you ever wondered how people actually make millions from investing, while others seem to lose everything? I used to think investing was just for rich people in suits. But once I learned how it really works, my money started making more money, even while I slept. Today I'm going to show you exactly how I started investing from scratch, no fancy degree, no rich parents, and how you can start building your first million. Before we talk about stocks, crypto, or real estate, let me tell you a quick story. 5 years ago, I had less than $1,000 in my bank account. I was tired of watching people online brag about their passive income. So, I decided to learn everything I could about investing, how it works, what's risky, and what's smart. I made mistakes, some bad ones, but I learned fast. And now, I want to break down the simple principles that can turn small amounts of money into life-changing wealth. Here's the truth. Investing is 80% mindset and 20% math. Before you invest a single dollar, you need to think like an investor. That means having a long-term vision, not a get-rich-quick fantasy. It means having the discipline to invest every single month, no matter what the market is doing. Most importantly, it means having patience. Wealth grows slowly at first, then all at once. As Warren Buffett says, the stock market is a device for transferring money from the impatient to the patient. So, how does investing actually work? Let's keep it simple. Investing means buying assets that make money for you. There are 3 main types that beginners should know. First, stocks. When you buy a stock, you're buying a tiny piece of a company like Apple or Amazon. Over time, as the company grows and becomes more profitable, your piece becomes more valuable. Second, real estate. You buy a property that either goes up in value over time or pays you rent every month. It's pretty straightforward. And third, my favorite for beginners, index funds and ETFs. Think of these as baskets that hold hundreds or even thousands of different stocks. They're safer because you're not betting on just one company. They're easier to manage and they're perfect for getting started. The key isn't being smarter than everyone else. It's just starting earlier. Okay, here's your beginner roadmap step by step. Step 1. Build an emergency fund. Before you invest anything, save 3 to 6 months of your living expenses. This is your safety net. Step 2. Eliminate bad debt. Things like credit card debt with high interest rates will destroy your investment returns faster than you can say. Compound interest. Pay it off first. Step 3. Choose your platform. There are great apps out there like eToro, Robinhood, or interactive brokers depending on where you live. Pick one that feels right for you. Step 4. Start with index funds. I can't stress this enough. They are low-cost, diversified, and so beginner-friendly. You can literally set it and forget it. And finally, step 5. Automate everything. Set up an automatic transfer to your investment account every month. This simple trick builds wealth quietly in the background without you having to think about it. Now let's talk about what not to do. These are the common mistakes that trip up most beginners. First, don't chase hype stocks you hear about online. Second, stop checking your portfolio every single day. It will drive you crazy. Third, never invest with emotion. Fear and greed are your worst enemies. Fourth, pay attention to fees and taxes. They can eat into your profits over time. And finally, please don't blindly follow financial advice from random influencers. If you can avoid these 5 mistakes, you're already ahead of 90% of beginners. Let's talk numbers. How do you actually turn thousands into millions? It's all about a magical little thing called compound interest. If you invest just $500 a month and earn an average 10% return per year, which is the historical average of the stock market in 30 years, that grows to over $1 million. That's the power of compound interest. Your money makes money, and then that money makes more money. The earlier you start, the more dramatic the growth. Waiting just 5 years to start can literally cost you hundreds of thousands of dollars in the long run. Once your money starts to grow, it's important to spread your investments around. This is called diversification. You don't want all your eggs in one basket. Keep a solid base in stocks and index funds. Maybe add some real estate. And if you understand the risks and are feeling a bit adventurous, perhaps a small percentage in crypto. But remember, consistency is your real secret weapon. It's not about getting lucky with one big win. It's about staying in the game, month after month, year after year. If there's one thing I want you to take away from all this, it's this. You don't need to be rich to start investing, but you absolutely need to start investing to get rich. Open that account, invest your first $10 or $50, and let time and compounding do their magic for you. Your future self will thank you. If this video helped you, please smash that like button. Subscribe for more weekly investing lessons and drop a comment below. Tell me your very first investing goal. Let's build wealth together.